Welcome back to yet another market outlook. Well, I did some annotations yesterday for gold, S&P 500 and the Nasdaq. I just wanted to share the same with you guys. So this is my analysis on gold stepping into the week. Pretty late because I've already traded gold this week. I took a short position yesterday and I'm about to inform you guys why. So on the daily time frame, we've seen gold go all the way back to its premium market, and this was last week on Wednesday, then face a sharp rejection from the premium market. So in my analysis, it says that gold has seen a sharp rejection in price from the premium quadrant, the premium market. I would elect to make sense of that as a confirmation of our bearish trend resuming. Remember, we were bearish during a good portion of this week. Then going into last week, we shifted our bias to bullish short term because of how gold reacted in the discount market. Then after this rejection from the premium market and its inability to take out this long-term high, assuming that the bearish trend has resumed. So I said here I'll be targeting 4-hour liquidity as the week progresses. So we're looking for lower time frame premium arrays to execute on. If we lose the 4-hour order block level, I will stay on the sidelines until price comes below it again. So the 4-hour order block level that I was talking about was this level that I marked over here, and yesterday price reacted really well from it, because we saw a sharp wick into the 4-hour order block, then a rejection lower. So when this rejection formed, as it may, I went into the 1 hour and the 15-minute time frame, trying to look for an opportune place to buy from, to sell from rather, and I found this M15 order block resting here. So I did take 2 trades. The first trade, I took the first trade here and put my stop loss around this place, but I was taken out by this price action which hit my stop loss. Then I elected to enter the second trade at the same place here with my stop loss slightly reduced, as you'll see here. So this is basically my trade history for yesterday. So the first sell I did was at the order block point, but my stop loss was too tight. If I had put my stop loss on this high, it couldn't have been triggered, but it was just below, just at this high over here. So price went up and triggered my stop loss, and I suffered a slight loss. Then I had to re-enter the market after more confirmation at this point with my stop loss at this high, aiming for this liquidity. So I took 2 trades, and as you can see from the trade history, both trades were closed sometime this morning in profits, of course. So I've already booked my profits for gold for the week. I'm yet to see if there'll be further opportunities to be given. That's on gold specifically, but I'm anticipating that price keeps on delivering lower. So I'd love such sort of a price action. Maybe we tag this lows right here, then afterwards some retracement before we continue going lower. So currently this is my analysis on gold. I'd really love to see price delivering lower. Remember, on the calendar we have news tomorrow on Wednesday and Thursday. Tomorrow we have a high impact news known as FOMC. It really does inject a lot of volatility into the market, so you guys could equally watch what happens to the market tomorrow at 9 p.m. sharp, just to see how volatility injection is witnessed. Yeah, so I'll be waiting now to see what price will do today, but I would really elect to trade gold after the FOMC news is released tomorrow. So for the most part, for a major part of today, I'll just be watching price action, and due to the fact that I've already booked a 1 to 5 risk to reward from yesterday's trade, say a 1 to 4, because the first trade was a loss, so I lost 1%. Then I took this one to 5.41, so I'm up positive 5 minus 1, that's positive 4, which is still a good weekly target. So even if I don't get another opportunity for the week, I think I'm well sorted. And that concludes my analysis on gold this week. Looking for bearish prices, but awaiting volatility injection on Wednesday 9 p.m. just to confirm my direction. All right, so moving on to the indices. I had written this narrative yesterday before price unfolded, so I didn't really change the first statement, which, as you all know, my bias on the index tree is still bearish. It's a bearish move based on the 60-day range, so we're still looking for this equilibrium, 50% equilibrium of the 60-day range as a probable target, and that means I'm still bearish on the S&P 500 specifically towards this target over here. And then for the Nasdaq, we've seen Nasdaq blow past its low, meaning it's equally time for me to adjust my range, but I'm waiting for a low to be formed so that I can use that low to adjust my range, because currently on the Nasdaq, price is on a free fall. What it means when price is on a free fall is price has just broken its previous range, and we do not have another low that has already formed for us to base our new range off of. So I'd elect to stay out of Nasdaq because of this. There's no defined range in price for Nasdaq currently, and until a low formation, I would elect not to participate in the market on Nasdaq. On the S&P 500, we have our pink line over here, but due to the positioning of price in the market where it's on a discount, it's in a discount quadrant in the discount market, and this is not the best place to sell rather. So I'd rather see some retracement back to maybe the premium quadrant of the discount market and wait for price to show its hand. I thought when the week was starting that we'd actually move higher first to tag maybe this premium array, which is on the premium quadrant of the premium market. So this would be a very good point to sell S&P 500 for the week. But as you all know, price doesn't deliver rationally all the time. So it just woke up on Monday and plummeted lower. So looks like institutions really had a rush to get to the level that they wanted to get to for this week. So no plays on S&P 500 since we are in the wrong market. Basically our quadrant or our market is not in alignment with our bias, because we're in a bearish market and we're expecting bearish moves, but we haven't really gotten an opportunity to enter that bearish move in a premium market or a premium quadrant. So just elect to sit in the sidelines for this week. It might be a bad week for indices, meaning I'm not really looking to trade anything on indices until both my bias and my markets align. So I'm staying out of S&P 500, I'm staying out of Nasdaq for the week, and definitely I'm equally staying out of US 30, because if Nasdaq and S&P 500 aren't giving me a clear narrative, I wouldn't want to elect to trade US 30. So that leaves us with gold for the week. So I'm really interested in what gold is going to do for a big portion of this week. I'm not interested in what the indices are doing because my bias and my markets do not really align. So let's see if we can get another continuation trade on gold after FOMC tomorrow, or during London or New York tomorrow. Yeah, so I'd like to stay out of the markets today as you wait to see how things unfold. That's my bias for the week. I hope it gives you some perspective onto how we apply the things we have learned so far when it comes to technical analysis. Until then, less is more as always. Good luck and good trading.